You were listening to chartingwealth.com for Thursday, the 8th of December, 2016. Markets are booming. We saw a little bit of a pullback over several days, starting on our two-day candle that ended on the 30th of November. And the market slid sideways, started going up some on that candle ending on the 6th, and then boomed on Wednesday, the 7th of December, up 1.10%. That is the total overall market. Remember, we were already in both up patterns on our weekly chart and our two-day chart. We told you to be watching for this rollback to end, and end did it. If we look at our 4-hour chart, what do we see going on? We saw that huge crossover happening in the morning on into the afternoon. We sure hope that you jumped in and started writing that, because it was a big afternoon. Now, what has happened with the two-day candle? Well, of course, as we continue to watch, we're just forming up now the first day of the newest two-day candle. It is time for us to redraw that candle, and since we've started with a new candle, we can actually do that. We always, when we draw candles, want to try to connect 3 candlesticks if possible, and we're able to do that starting with the candlestick ending on the 23rd of November, and it ends up touching the bottom of the 6th and the new one for the 7th. And again, remember, the current candle will finish redrawing at the end of the day on Thursday the 8th. So we're in confirmed up moves. Now remember, all things being equal, the market always tends to move in the direction of the biggest chart, and that biggest chart is our weekly chart. We told you to get ready for this setup, be prepared to jump in and write it, and of course, we've seen it happen. This is the way that we trade and the way that we encourage you to figure out how to do this, to practice it until you get good at it, then you can make up your own mind. Remember, we're not a stock calling service, we're an education firm. Let's take a look at the S&P 500 as shown by SPY. It also had some lagging days on the two-day candle ending on the 30th of November. The 2nd of December started moving up with that candle ending on the 6th, Tuesday, and then, of course, booming up 1.27%, even more than the total market. The S&P 1.29% on Wednesday. Now, let's take a look at this 4-hour chart, see what we see. Of course, we see it crossing over right there, heading up in the morning and then on into the afternoon. Lots of exuberant just shot through that Bollinger Band and pushed up above the old two-day trend line that had already been penetrated. We're going to be redrawing that. And of course, the weekly still in a confirmed up move. So we're going to redraw our two-day trend line on the S&P 500, and we've got new strong up movement. Always good to see that December effect coming into play, and we'll just continue to monitor these markets. Hopefully you got in and you are riding this move up. We told you to watch for it, and it darn sure happened. Okay, lastly, as far as our indexes go, we look at the Qs, the NASDAQ 100, 1.27%. It has crossed back over, going up on the two-day candle. But again, we got some real problems with the NASDAQ 100. The weekly is in a confirmed down move. Now we've had the two-day chart cross back over in the opposite direction. We don't want schizophrenia as far as our charts go. We want our weekly chart to be paralleling our two-day chart. And remember, we want our 4-hour chart to go in the opposite direction of both the two-day and the weekly, and then correct back over. One thing you can look at is when you do see the daily, the two-day, and the half-day rotate over at the same time, it's typically showings of a strong move, but very, very hard to chart accurately. So we're making no call on the NASDAQ 100. Yes, lots of up movement, 1.27% over the course of the first day of the new two-day candle. And we do have a cross through on both the 4-hour chart and on the two-day chart. But again, our weekly chart still in a confirmed down move. Does not make us feel good about what's actually going on. We don't have any crossover happening yet. We still have derivative oscillator negative on the weekly, and we don't have a cross on the PPO. That is our old moving average convergence divergence indicator. We don't feel good about that. We basically have right now 2 dojis in a row, so lots of indecision as far as the weekly charts go on our QQQ or the NASDAQ 100. So we make no call on that now. Again, our job is to do everything we can to ride trends, not to try to establish new trends. That is very dangerous. We want to make sure first you preserve capital in your virtual trading account, and second, that you then safely make money on those virtual funds. And again, remember, we're not a stock calling service. We are an education firm. We want you to practice trading the way that we teach. Get good at it. Take everything you've learned through all the different things you've done, and then you make up your own mind when you get good enough to feel like you can use your own money. Lastly, let's go back to our 2-day chart. Take a look at gold. What is gold doing? Gold's in a confirmed down move, still below the weekly chart. It has broken through with the latest up movements, 0.34% for the day. It's actually broken the 2-day trend line, still in a confirmed down move, however, on the 2-day chart. If we look at the 4-hour chart, what do we see going on? We see on the 4-hour chart for gold, it crossed over going up back on the afternoon of December the 2nd. And again, gold's really been sliding sideways. It has been very, very hard to use anything that the 4-hour chart has been telling us. So again, you could look at this as a pullback, and if gold then rotates back over going down, perhaps you might want to look at using our standard approach and jumping in to an inverse gold fund. But we haven't seen that happen yet. We'll keep looking to see if that occurs. We had up movement in the morning with some backtracking in the afternoon on gold. That is where we are at the end of the day on Wednesday as we go into Thursday, the 8th of December. Hope that you are doing great, practicing every day, that you have our daily market worksheet, that you've watched our 15-minute how to read a stock chart video, and that you have the layout we use at freestockcharts.com. If not, you can get all 3 of those things by signing up for our newsletter, going to chartingwealth.com, put in your first name, your email address, and we will send you all the daily reviews and our comprehensive weekly review that we do once a week. But you'll get our daily reviews every day the market is open. We're here for you. You'll also see all of our training. It's all available at the website, also at our YouTube channel, and also at iTunes. If you appreciate what we do, we ask you to do a couple of things for us. Go to iTunes, subscribe to our channel, give us a 5-star rating, say something nice about us. Also, you can go to our YouTube channel and subscribe. We would appreciate that too. That's where we end up uploading everything first, right after we send out those emails to all of our subscribers. Again, God bless you. Thank you so much for practicing with us. I want you to get good at this, because I'm telling you, once you can master reading these charts, the world is your oyster. Riches are just waiting to come to you. So practice with us every day. Learn this. I mean, if you can read these charts, think about it. It's like receiving the Wall Street Journal a day or two in advance. What could you do with that knowledge? We encourage you to practice with us. Get good at this. You can learn how to do it. Thanks so much. God bless you from chartingwealth.com.